Tesla earnings call. Takeaways from the call: the stock is down about 2.5% after hours. Interpretation of the stock reaction and also our outlook for the near future, given the information that was revealed in the call. This is the Not Even Wrong podcast. It's April 26, 2021. This is Krimdelko. For the day, the fund is up 3%. The market's up 20 basis points. For the year, we are up 5.2%. The market's up 10.7%. We're underperforming by 5.5%. Today, after close, Tesla released their Q1 earnings report. And here are the highlights, here are the facts. And then I want to talk a little bit about the interpretation of the stock reaction, what the street might be thinking, and then what we're thinking and how we're looking into the future of Tesla, given all this information. So we are looking at pretty much inline sales numbers. The automotive margins were 26.5% and 22% ex credit. Credit came at about 500 million, higher than expected. So the margin is high, pretty good, and I would say definitely satisfactory. 22% automotive margin ex credit is in line with, I think, the trajectory of improvement, the trajectory of better cost situation, because the ASPs came down and the cost came down even more, and this is really what matters. So we're pretty happy with that. The first reason why the stock reaction was negative is the SG&A is pretty high, much higher than expected. Some of it is stock-based compensation, some of it is Elon Musk, and then some of it is also other, let's say, R&D and things like that. Zach Kirkhorn spoke about this on the call, and he said that it is pretty much R&D investment and also the preparation and investments for the Model S and the X, and we did not have any sales of Model S and X, so that is holding back some of the SG&A operating leverage. I think that's probably also one of the reasons why the stock reacted negatively, is that the Model S sales got kind of pushed out into Q3. I think this is probably, in my view, the main reason why we had a relatively muted reaction in the market after hours, because we were expecting S-Plaid to deliver some substantial sales in Q2, and it looks like it's not going to happen. We're going to have a little bit of sales in Q2, and then pretty much in Q3 it should ramp up. This is how Elon Musk kind of, at least this is how he explained it on the call. So I think this is, I would say we're getting two, we're hitting two flies with one hit here. One is we're explaining the relatively low operating margin because we had infrastructure build out, R&D expenses and things like that against S and X Plaid, and still no sales. And then we also had a push out into Q3 for substantial S, and then Q4 for substantial X sales. I think on the positive side, though, they did kind of say they want to do 25,000 per quarter or 100,000 per year, and this is very good news, because Model S and X originally have been 100,000 cars per year type of volumes. Then they were reduced to more like 60 to 70,000, and now we're back to 100,000. And if we look at the ASPs, I think this is pretty interesting. I think this could actually yield to a contribution in margin, a meaningful contribution in margin. And I think as an investor, I'm pretty happy about that. I personally expect, particularly Model S Plaid, to be a home run and actually do better than 100,000. But that's me, and I don't know if they have the kind of capacity to expand. But I'm sure if the demand is strong, and Elon Musk alluded towards that he thinks the demand will be very strong, particularly for the Model S Plaid, because the Model S Plaid is, if you think about it, it's kind of capturing a couple of things. It's capturing, of course, the traditional Model S demand, but then it's also going after luxury sedans, and it's going after sports cars, it's going after sports sedans, it's going after people that want to show off their wealth, it's going after people that want to thrill. It's capturing a lot of potential markets, and and it's a relatively decently priced car for what it is. Of course, the high end is 150,000, but even that, if you think about it, people that buy Maseratis and things like that, for them, if they pay 120 or 150, doesn't make such a big difference. But the difference between a $120,000 Mercedes or Maserati and a $150,000 Model S Plaid Super Pro is tremendous. So I think therefore that is pretty good news. I think again, to continue with the call and the muted reaction, we did not hear anything about Cybertruck. I think the Cybertruck situation is definitely being pushed out. We won't see meaningful volumes this year. And I think that was still the hope. It's not going to happen because they didn't talk about it. Now, the main contribution on the talk, I think, or let me rephrase that. If I had to rank, let's say, what was talked about and sort of handicap it with the surprise factor or the information content factor, I would definitely say that the talk about the solar business was the most interesting piece of information. Elon Musk went out of his way to talk about solar, distributed solar, and how that is going to be part of the equation of decarbonizing energy. Now, we have spoken about this on this podcast several times, that we believe that decarbonizing energy is a long-term goal for Tesla, and that it's not just the electrification of transportation, it is the decarbonizing of the energy infrastructure, and transportation is only part of it. And this is what I think was also reiterated here by Elon Musk, that we will have the necessity for a solar infrastructure which is different than what we have today, in the sense that we can't have the centrally organized utility type infrastructure like we have today, particularly not with fossil fuel burn and things like that. We need a new solution. And the solution, according to Elon Musk, is that we will have solar, distributed solar, and in particular, we will have houses with solar roofs and the power pack. And the reason the power pack is so important is that you can standardize the connection between the solar on the roof, the inside of the house, which consumes the electricity, and the outside, which is either the utility or another distributed network or something along those lines, where the electricity can be channeled towards other places if needed. And the reason this is so important is because without the power wall, you basically, like I'm paraphrasing here, every solar installation is a piece of art, because it's very bespoke. It's very, every house, every connection, everything has its little intricacies and needs to be organized. And there need to be special inverters and whatnot and all that stuff. Versus if you have a power wall, you can standardize everything, because the power wall is the gateway to inside the house and outside the house. And this is what's so great about the power wall. So to cut a long story short here, what we have is we have solar roof and power wall, which enable a standardized, scalable solution for distributed solar. And this to me, it's interesting, because Elon Musk has spoken about this before, and this is not the first time that we hear about this. But what's really intriguing is that he is reiterating it and making sure that that is part of the investment thesis of the stock. And I think that is interesting. I don't think the street's gonna pay much for this right now, but I think we as investors, we need to keep that in mind, and we need to keep this at least in the back of our heads. This is part of the bull case of Tesla. And I think the fact that Elon Musk made the comments is very encouraging. So to summarize, the numbers are pretty good. They're not exceeding anything that we expected, but they're good and they're solid, and this is great. We had good gross margins. We missed on the operating margin side because of higher expenses for R&D, and also high expense for SNX that have not generated any sales. On the positive side, we expect very good demand for SNX Plaid, on top of all the other demand that is coming. They also guided for extremely high volumes for Model Y, which is encouraging. Again, not surprising, but very encouraging. And we also have this new narrative of distributed solar, which in our point of view is a big deal. It is part of the decarbonizing story of Tesla, which is very important. And it's also, I think, it's also inspirational in a sense that it offers a solution for how we can power a decarbonized energy infrastructure. And therefore, I think we should take this very seriously. Now, last thing I want to mention is the conversation about DOJO. I think DOJO is also very underrated in a sense that it is the future of the company. It is also definitely part of the high valuation, and I don't think it gets enough credit. So DOJO is basically a central supercomputer that is optimized for neural networks, and those are optimized for graphical learning and graphical interpretation, or in general for computer vision applications. So DOJO is a supercomputer that helps training computer vision, or helps for training to improve computer vision. Now, also on this call, Musk explained in pretty detail, I think he's never spoken about this in this detail, about the necessity for Tesla to solve computer vision. Because computer vision, according to Elon Musk, is the path towards real-time or reality AI, what he calls reality AI. So this is as opposed to, let's say, the virtual AI, or the type of stuff that Google or Facebook are doing, which is in the virtual digital world. This is reality AI, artificial intelligence implied through robotics in reality. And that has to be solved through computer vision, according to Elon Musk. And DOJO is the part of the equation which helps train, based on all this data that the Tesla collects, helps train the model and helps getting self-driving to the point where it needs to be. So this is what DOJO is, and DOJO also could potentially be like an AWS type business. I think Musk was a little reluctant to talk about this in terms of AWS. He was just much more saying, well, I mean, if it's useful for others, we're happy to offer it to others. We're not talking about AWS here, but of course the analogies are very simple. Amazon built AWS out of their own necessities. Amazon had a problem in the beginning, which was they had large volumes around the holidays. And in order to solve for that problem, they had to build massive capacity, which was underutilized during the rest of the year. And therefore, AWS was born. Similarly, Tesla has to have massive capacity to train for data. The better the models get, the more free capacity they might have, and they might be able to offer it to others that could solve similar computer vision problems, or even new types of problems based on maybe computer vision models that then could turn into maybe natural language processing models or other types of AI problems. So to summarize again, I think I just added this DOJO thing to the summary because I didn't speak about this before, but I think the two key takeaways from a strategic long-term perspective is number one, distributed energy, and number two, DOJO. Both of them, or let me rephrase that. Number one, distributed energy through solar and battery packs, and number two, neural network computing, neural network compute. This is part of what Tesla is turning into, and therefore also in a long-term strategic outlook for us investors, we are investing in decarbonizing energy and neural network compute. Thank you.